Today is Wednesday, August the 28th, and this was interesting given the news that came out of the UK and the weakening of the British pound, but I guess the price of oil helped energy stocks, and overall everything was good in the market. As far as I know, there were no tweets from the president. We've got the volume again pretty low, but the Dow popped and just kept rising, as did the NASDAQ, as did the S&P 500. And advancers led decliners by 70% to 30%. So do we have any commitment? I doubt it very much. We don't have any commitment because we're back at the zero line. We're going to be a little bit over the zero line. So we've just spent the last 2 weeks on either side of the zero line, showing a lack of commitment for money moving into the market or out of the market. Sort of just taking a wait and see position. But I want to show you something interesting in the S&P 500. And this is a monthly chart going back to 1995. You have the Elliott wave overlaid on top of that. And you can see Elliott wave has different components. I'm not going to go into it too much, except the Elliott wave predicts that with this A, B, C is going to be up here around 3,400. It doesn't say in what time frame. But if you look at this low in January of 1995, we had a high here, and we repeated that high. So I'm going to say from this move to this move in May 2007, and then down to our famous low of February 2009. What would it be like if we were to repeat this move on top of this point? That predicts that it would take us to an equal wave up would be 1823. We blew past that actually, and we went to the 127.2% and immediately stayed there for a period of months, and then dropped down to test what? The 100%, 1823, 1824. And then we started, this was January of 2016. This was an election year. And then we started a move up that stalled at the 127.2, this previous high, which you would expect, but we broke through that previous high. And that was the Trump, this is all the, let's see, back here, this was Bush. This was Bush. This was Obama. Just saying, not important. This is Trump. And where did we come up to? 200% exactly. 2978. So we doubled the move from January of 1995 to this top right here. Doesn't matter if I change it to, oops, sorry. That's something different. That is a different thing that I want to show you. And that is a trend line that starts in the high period of 2007 and got touched in December 17, touched again in September 2018, and then touched again in July. This is an important trend line to keep an eye on. This indicates that we are ready for another move up. It may take some time to break 2978, and we are going into an election year. Let's just take another Fibonacci, but let's just do or let's do the same thing. Let's do the expansion, but let's do it on this point, to this point, to this point. This is just a wild thing, does it show us anything? It certainly does. It shows us that we have several points, many points, that are doubles. This one here, let's just take that one away because it's a minor. We're taking basically, we're saying that the 100% line, copying this move up back from 2015 to 1995 to 2007, is where we started a new wave. Let's just remove this for a second. Now we're looking at repeating this wave from this point. And this point would be the finishing of repeating this wave, 95 to 2007. 78.6 is where we're getting the resistance. 100% would be where? Pretty much where the Elliott wave says we're going to top out at C. So now let's look at some confluence, and let's bring that other extension back and look at the areas of confluence. These two are the same. These two are very close. These two are dead on, 161.8 and 50%, 178.6 and 61.8%, 200% and 78.6. These are confluence of two different Fibonacci extensions. I'm going to say that we are in for a bit of a chatter period. This is the monthly chart, remember, so it's going to take time to see something. But this indicates that we could top out at this line and 100% in June of 2021. That would be into the next presidency. I think that's pretty interesting. So let's just go and look at the S&P today. I thought we would be down today. I thought we'd be up yesterday, but we had a down day yesterday and an up day today. I feel now that we're in for the rest of the week, minor uptrend. Apple up $1.29, took a bounce right off of the cloud and moved up as we thought it would. Caterpillar, look at that. Said it would come down to touch the cloud and find support. It's perfect. Perfect. We came down at this point, which was a low. This is the gap going back to 2017, the summer. We found buyers at the top of the gap in 2018, and we have buyers at the top of the gap again in August, today, August 28th, 2019. So this prediction so far is right, and now I believe it's time to buy Caterpillar, and tomorrow at the open, if we have a green day, I'm going to add to Caterpillar because it's a good dividend stock. It's way oversold, and this is a time to buy. I bought at 117. I would love to buy tomorrow on another test of the top of the cloud at 112. Gold, still holding on to a very large portion of gold. Well, for me, 1,100 shares. It was down just a little bit today, but that's a doji, that's indecision. Doesn't mean anything. It's still a very good stock to hold on to for those days when the S&P doesn't perform. Whirlpool, an outstanding day. Outstanding day. So I think we're still moving up to the 50. Temper my exuberance and say we're going up to the 50, but then we could have some chatter. And let's watch for this kind of movement because we're in the cloud. Just like the S&P, back into the cloud where we're going to drift. Snap was down a cent today, and maintained support on the cloud. So let's put an alert above the 50 simple moving average. And let's think about buying some when we pass the 50 simple moving average, since now we've popped above the 50 enhanced moving average. I never remember what the E is for. But anyhow, so that's it for today. 10 minutes. I'm sorry it took so long, but I think that looking at the S&P on that monthly chart back to 1995, that's 24 years of history, was worth the extra diversion. Thanks very much.